What is going on, gang? Ben here. Today we have another lesson for you guys. We're going to be going over intermarket analysis. Now, for those of you who follow me on Twitter, you see that I have DXY literally in my name, and there's a crown next to it. And no, it's not because I'm the DXY king. It's because DXY is king. For me, I don't deviate or trade against DXY. This is something I've been doing for a long time. It's predated my study and implementation of ICT concepts. So I've carried this for a very long time with me, and it translates to everything I do in the market. So let's get into it. What is intermarket analysis? Intermarket analysis is studying the correlation between two assets. There are two types of correlation in the markets. There's positive and negative correlation. Positive correlation means that markets move in tandem with each other. So if one market is going up, the other market is doing likewise. And negative correlation or inverse correlation is the opposite. It is when one market is going up, the other is going down. Positively correlated assets are like in the index markets. In a perfect world, when NASDAQ or S&P makes higher highs or lower lows or any sort, the other indexes should as well. Likewise for US dollar based currency pairs. When DXY goes up, UCAD should go up, dollar franc should go up, and dollar yen should go up. Now, inversely correlated or negatively correlated assets, US dollar quote currency pairs versus DXY. So that's like your euro, your pound, your Aussie, or anything standardized in US dollar. And this is my understanding of US dollar, and where my implementation comes from is risk on, risk off scenario, and that's what we're painting here. Anything that's based in US dollar is going to struggle to rally against a strong dollar. And likewise, if it's a weak dollar, there is, less external downside pressure. And, think about it logically, right? If I have any asset, whether it be commodities, crypto, real estate, or equities markets, if the dollar goes up, does that mean that the value of everything that's standardized in dollar goes up as well? Or does that mean relative value exists and we can expect that these prices of these assets to go down to find a equal value against the dollar? Now, how is intermarket analysis useful? For everyone who trades Forex, currency pairs are you're trading the relationship between two assets. So we are isolating one or both of these assets and painting a clear picture of what it wants to do individually, and then we can look for and we use that as confirmation in our asset class of choice when we're looking to participate in the markets. Confluence, if this then that. So everyone who has been watching knows I use DXY. I don't necessarily look at Euro futures. I don't necessarily look at pound futures or anything like that. It's really just DXY. Now, when I paint my areas of interest for dollar, I look for, reciprocation of DXY either meeting a premium or discount level with other risk markets doing the inverse, or the same, depending if it's a USD base currency. So then we can start painting an if-then statements using DXY. If DXY has come into any sort of premium array, look for equities to be in some sort of discount array and vice versa. Now, how does this become actionable? This is where SMT becomes useful. SMT, or smart money technique, is observing a crack in correlation. This is really just divergences, right? And this is where, I have my knowledge of DXY from before ICT. So S&T wasn't a thing for me. It was all divergences. A cracking correlation is often the first sign of potential manipulation. And for everyone who trades ICT, manipulation invites opportunity, right? So let's get into some charts about how this is helpful. So here we have on the left DXY, and on the right we have dollar franc. Now, I mentioned the difference between positively and negatively correlated assets. This is an example of positively correlated assets. As we see, looking just off the rough shape, these two charts look quite similar. The opening price being here, this down close candle right here, up, down, up, up, down, up, and so on and so forth. Now look at the keys, highs and lows. Key high for dollar franc came in at Monday at 10 a.m. Key high for dollar came at Monday at 12 a.m. So the disparity is a little bit off. Next key high, you have made a lower high here on dollar franc Tuesday at 3 o'clock. (3 a.m. my apologies), and we made a higher high here to here on dollar at the same time. Now here's where S&T comes in. So here we don't have S&T. Sorry, this is not the right pair. For this pair, when comparing highs and lows, we have S&T here. We made lower highs compared to DXY. We made a higher high. Now we can run it again because dollar made a second higher high from here to here. Same thing. I'll delete the first one. And here to here. Now, what is that telling us? What this is telling us, as Swissy is refusing to make higher highs alongside dollar, it means that this asset in particular is under distribution. So there has been a crack in correlation, which we can then look for a shift in market structure to be born of that crack in correlation. And that could be our signal to get short. As you see, you have SMT at the highs, SMT at the highs, shift in structure with displacement, creating a fair value gap, trades back up into it, and then sells off. And further examples of SMT here to further our weakness claim for Swissy is these lows here. Dollar makes slightly higher highs. One of the low of this candle comes in at 103.001, and the low of this candle comes at 103.002. So slightly higher highs here, slightly lower lows here. So our correlation is still this asset is under distribution compared to the dollar. And when we come back into the peak of our retracement, we get this again, here to here. Lower highs. Higher highs. So distribution. And we're not going to see it again here. But so we've used one part of this currency pair to give us insight on what the overall sentiment of the market is. Let's show you one more. Okay. Here we have US dollar side by side with euro. Now this is a little more precise. Upon our Kraken correlation, we're looking at a Kraken correlation at specific areas. So, in terms of high of the week for dollar, this doesn't show me anything. This wasn't a predetermined area I had, and I don't have to know every swing high and swing low for me to use this relationship. But euro replicates dollar. If we move into Wednesday's price action, this SMT here on Wednesday, where is this SMT occurring? This SMT is occurring inside of a daily opening gap. Here. So after a shift in market structure, here's just your swing low taken out. Shift in market structure, we trade back into a premium of the range as well as a premium array. Form SMT, and then have a shift in structure and reprice lower. Now as far as euro, making a higher low against dollar, higher high, means this asset at this time is under accumulation. So that is our signal to look for our entries long, or a potential shift in market structure to get long. Now, these are the only two I'm going to show you, but this concept works on all asset classes. There are many correlations and inverse correlations, just to name a few. You can study the relationship between, bonds, interest rates, and the dollar, inverse and positive correlation. Like I said, DXY or dollar to any USD correlated asset, standardized asset, anything priced in US dollar should be inversely correlated to dollar. In terms of currencies, certain currencies correlate to certain commodities. For Aussie, Australian dollar tends to correlate positively with gold or silver. For CAD, Canadian dollar tends to correlate with oil. So for any asset class, you can find different assets to study as well to give you potential confirmation outside of just the chart you see. Because if you trade in a vacuum, you're likely to be pulled into the manipulation if you can't confirm its validity or not. And that's what intermarket analysis is used for. It's confirming other price action. So I hope this was helpful, and we'll talk soon. Be good.